like a good 80% of the entry confirmations I'm looking at. And this is also one of those entry confirmations that I would be taking after any type of impulse move and any type of like AMD cycle. Like whenever the market is doing an actual impulse move, this is how you execute it. And also, I did have a trade yesterday, which was a buying trade on gold yesterday. I did take a buying trade, and that was also absolutely based on it. Like, of course, anybody could just go to my Instagram, check it. It was a buying trade. Let me show you. It was a buying trade here at this point. Same no breakup structure concept used like that. So it's a very simple and very effective concept. Market moving downwards, then moving back up, and then moving back down. So it's absolutely the best confirmation for any sort of AMD cycle, because also, if you take a look at it, what happened here, it was the same thing. Accumulation, manipulation, distribution. So this is the way you execute it properly. And of course, that's what I'm going to be waiting for. At this point, it's really just a matter of patience of getting this trade. It's absolutely going to be easy. Okay, guys, so that's what I want to share of Euro USD. I see this was like about a 35-minute explanation, detailing everything. So let's just go over to gold because that's gonna be the other important part here. One thing I want to say of gold is just take a look at how we actually came back to that 30.2. So any sort of expected pullback that should have been happening, like that pullback has already happened. The 30.2 has been reached, and now it's pretty likely for things to be moving higher. Why is it likely to be moving higher? Is also because of the historical data. In the historical data, we can also see that typically in March and also April, gold is typically creating higher prices. So it just absolutely undoubtedly the 3,000 price is going to be coming, and you're gonna all see the 3,000 price eventually coming up to that psychological key level. So it's really just a matter of time to reach it. And I can also pull up the let me try to pull up the historical data in a second, and at least we can also finish up the second part of the lesson of the historical data, because that was the other thing I wanted to discuss. Okay, so now I just gotta see how can I pull this up on my screen. Okay, I'm gonna share my screen again. Okay, so this is the historical data. So to finish up the lesson, when I touch base on the historical data, it's really something we just barely mentioned. We did have a couple of lessons on it, like how it works, what to expect, stuff like that. But it's just something really need to further discuss. So, of course, as you may know, this is a 10-year data. Why is it 10-year? Because that's like the smallest time frame you can use, or that's the smallest time period. Like you can use 20-year, 30-year, anything longer is just making things better for you to a certain degree. However, 10-year is perfectly fine. It's not exactly important to make more than 10 years. It's absolutely fine to just do 10 years. So what this is as far as we see that a month is showing a positive return because this is, of course, the average data from the past 10 years of that month. As far as we see how the market is positive, we are also expecting higher prices on that in that month. And right now, considering that the 10-year average data is a positive return in March, it also tells me the likeliness of gold moving further higher up to the 3,000 level is absolutely possible. The likeliness for the entire March being bullish is once again absolutely possible. And let me tell you another thing here is the closer something on the historical data is to 1%, the higher probability it is. And if it's above 1%, it's like absolutely going to happen with a very high chance. So here on March, we can see it's 0.81. That's of course absolutely close to the 1% rate. And that's undoubtedly bullish here in the historical data sense of speculating on it and, just expecting higher prices for this month. And also, what's even more important, that April was above the 1% ratio. So that means because the next month is also bullish, this month is kind of unlikely to be seeing a very large bearish trend. Any sort of pullback that we are going to be seeing is pretty much only a very minor pullback in order to continue higher. So the fact that also the following month is 1.6% above the 1% rate, it is just absolutely moving to 3,000. You guys are gonna see. So that's regarding historical data. This also played a big role to the entire bullish bias I had during this week. Also for today, you would rather want to stay bullish on everything. Of course, once again, it's more towards the end of the week, so that potential pullback is always in the back of your mind at the end of every week. But you shall be absolutely bullish moving forward for the rest of the month, and I'm going to be staying bullish. So today it's really just a matter of time for me to find that buying trade on gold, which is of course preferably would be here on the psychological key level. We just swept the previous day's low. Because we swept the previous day's low, that is also making things absolutely possible for reversal. So this is the previous day's low sweep. We just technically also from this swing point to this swing point. Let's take a look at the H1. Yeah, from this swing point to this swing point, this kind of range is roughly the 618 and 0.70. So yeah, the 662 or the 618 is roughly matching there with this psychological key level. And right now the market just created this pullback once again, which is once again part of the AMD cycle. So taking a look at this here, accumulation, manipulation, distribution, things are once again getting much higher probability to be taking that buying trade. But would I be taking the trade immediately right now? I would wait at least for the due to AMD cycle. And also I would preferably want to have at the psychological key level. So this is going to be pretty massive. And as far as I can get that confirmation, I'm going to go ahead, place this trade here, and simply target this high or even further, which would be the all-time high, because of course I'm expecting higher prices. This high, which is still an Asia high, it kind of seems to be aligning with this here, so that also tells us it's equal highs right there. So I'm definitely sticking with my bullish bias. But of course, if anybody has any other opinions on selling, I do not really care. I'm just staying with my ego on buying. And of course, if I'm wrong with it, I'm wrong with it. If it goes lower, okay, fine. It might go lower. But other than that, I'm absolutely sticking with telling you that this shall be moving higher. Psychological key level and also the information is going to be definitely driving this higher. So going back to the rates here, like I said, all of this here is speculative to a certain degree. You might be asking that what happens if certain fundamentals are not matching with the historical data? Well, I can tell you there that if they are not matching with the historical data, but everything else is telling you a different direction, like let me tell you an example. So let's say historical data will be telling you that the month is bearish, but everything else is telling you it should be bullish, the technicals, the market sentiment, or whatever that's relevant at that time, it will be telling you a different direction. Then of course you wouldn't want to be using the historical data. You could like disqualify it from your confirmations. But then you might be asking the question that, okay, if I'm disqualifying it from my confirmations, why am I using it in the first place? If it doesn't matter if things are going against it. And I can actually answer that to you. The reason why this still matters, because we are not only looking to have a short-term blind mindset of just looking at what's happening today. We also want to look at what happened previously and give us a much better understanding that, okay, in the past 10 years, this has been doing something. It has to be likely doing the same thing this year once again, because the average data is telling us the probability is indeed there. So it's once again adding to the confirmations and adding to the reasons to do something. Like that's all what trading is. The reason why we have so many confirmations and we have so many things connected with each other, because that's how you build a logic. You're not building a logic in the market with one single concept. You're building a logic from the market from actually connecting one logic with another logic and then also getting more and more reasons to do something. So that's why this is going to be quite important. But the one important thing you just gotta know here is really as far as something is higher than 1% here, that's when it's absolutely going to be happening. And also March on Euro USD, it's barely even anything. It's 0.1%. Like this percentage here is so small that it doesn't even tell us anything, because it's absolutely not close to 1%. You really want to focus on the ones that is of course higher, preferably, and close to 1%. So this is almost like zero, and Euro USD, I just cannot use this here. Like this is almost literally zero. But September, that's absolutely good. December, the one close to 1% months are good. Also, the ones that are giving a seasonal logic, let me tell you, if I would tell you that Euro USD is strengthening because of the it's Euro USD is going to be stronger in the summer. I'm not only looking at the percentage, I'm also thinking like a logical human. Why should Euro get stronger in the summer? Because it's holiday. A bunch of people are buying Euro, they are traveling. So the European economy is getting stronger. So that's why we see stronger months in the summer month. So again, it ties a lot of times back to the logic, but as a simple rule, the closer it's 1%, the better it is. So I could also go back here, show you like let's take a look at the month of January. Like take a look at how large percentages here. This is 3%. Obviously, it's absolutely bullish. Take a look at what happened here. So this is beginning of January. This is the end. See, like it was absolutely bullish. See that? So it doesn't matter.